General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Let's knock this out. So it's going to be week 4. Let me see this. Week 4, 8:18 to 8:22. Hold up. Sentiment. Okay, bearish sentiment is starting to climb. Bearish sentiment is starting to climb. Okay, bearish sentiment is starting to climb. Note, each week is increasing. Okay, let's look at the VIX COT. CFTC. CBOE. Okay, commercials are super long. Super long. And they hold 51% of the open interest. News, Forex Factory. Let's get it for this week. Okay, it's FOMC minutes is not the decision. And Jackson Hole. Okay. Jackson Hole. Jackson Hole week. I'm thinking typical week 4 behavior. Don't go looking for home runs. Wilder minutes, unemployment Thursday. Thursday is going to be a big day. Best day this week will be Thursday because unemployment and PMI. Find out how they get the unemployment number. I just found that out interestingly. It's a survey. That's why when you compare it to the Bureau of Labor Statistics, it's always different. CME Fed Watch. So it's interesting because we make a fuss over the numbers without knowing how we get the numbers. So I actually just learned how we got the numbers today. No, I learned it yesterday, basically. I didn't do an episode yesterday, though. I don't really do them on Friday. 92% chance we stay. 92% chance for a rate cut. Like I said before, this is most likely due to the tariffs. With India being the big deal. A peace deal with Russia. And we go back to like 43% chance of a rate cut. Give me this. India and Russia capitalized. Earnings this week. Okay, let me get the earnings calendar. Boom, let's see. Is it NVIDIA? That's the only thing I think we're waiting on. No. It's Target. Boom. Let me stick it here. Let's just double check. Palo Alto. Nothing. I'm looking for top 10 companies only. Zoom. Okay, nothing here to move the NASDAQ. Home Depot is important though. Let me check Slick Charts. Home Depot's up there for something, but I don't think it's NASDAQ. Slick Charts, NASDAQ. It could be Dow or something. Yeah, ad blockers on for sure. Netflix, Tesla, Google 2 times. Yep, that's it. I forgot, but I think it might be Home Depot. No top 10 companies for NASDAQ. I think Home Depot is US 30 or the Dow. I like trading the Dow sometimes. Sometimes it moves when NASDAQ gets held. Let's go here. Dollar on the daily. Accumulating, but still bearish. accumulate in, but still bearish overall. Still thinking lower. COTOI for dollar and NASDAQ. Really NASDAQ. Let's see. Dollar is kind of obvious right now. Here we go, finally. Okay, what we got here? Commercials are heavy short. A heavy short. NAS. We could get a sell-off this week. If you mix sentiment with commercial positioning. So this should really be a word, NASDAQ. Y'all let me spell other crazy words. But all right, look. No, this positioning is a hedge. Look. At the total positions. It's about even. So don't go selling yet. Good news, we easily moan. Peace deal with Russia. Peace in the Middle East. Any of that stuff, we moan. What's the September contract? Month. Just a month, right? Yeah, month. August TP still here. This is important. This is important. Okay. We're not closing above this. From here to here, here's the idea. This is a huge candle. We found support here. But really, this imbalance could be the retracement. It will be one day because liquidity imbalance. So no, we're not closing above previous month's high. This is week 4. If we thinking liquidity and imbalance, then the monthly fair value gap will be a retracement objective in the future. Let's go to the week. Okay. Doji here. Going into this week, this everything above here is gonna be, if we reject this, it's so from here to here, if we reject this, then we sell. This big down candle, it didn't take liquidity, but it was interesting though. Push up, retrace, turn range liquidity sweep, push up, take liquidity. From here to here is beautiful move. Going into next week, if we get rejections off the weekly wick, or previous weeks of the weekly wick that took the old all-time high, then I would be interested in sales. For buys, I would want to wait for previous week's low. Daily, okay, we close this. This is interesting. I still don't like this fractal. I still don't like this swing high. I don't. Nice wick rejection here. Loop close, imbalanced field. This candle could end up being a bearish order block if we close below it. I still don't like this high. Me, I want this high ran. I don't want to close just yet. I want this high ran with the up candle. And then a sell-off. I could trade it. Where would I want to trade it though? I really want to buy up under here. Like we run this just to get this cleaned up with a nice down candle, then push back up, then push back down. Don't really leave this range, but for the sake of buying, we just had a down candle. Sunday, gap down, gap up. I have no idea. Sentiment's kind of boring. We probably don't gap that much at all. Kind of open up around here. We're at fair value for buying now, but I would rather buy if we take this out. Type 2 vibes, push up, boom. I do want to sell, but I don't like the high. I would rather it run the large up candle low first, so it can be a longer move than if we just run for the high right off the back. H4, we came to this order block. We didn't react off of it though. So that's a sign it's weak. We got some equal lows here. I do like this for the lows. It's that day here. Yeah, even right around here, because all the people who bought here, stop this. Previous week's low, buy. Seems valuable. Looking for buys after previous week's low is ran is the most logical. Buying right from here, we would have a major liquidity pool right under us, right under our stop loss. So going into this week, we can't sell unless we run previous week's high, and we can't buy unless it run previous week's low. If we are one-sided this week, then Thursday could be our turnaround for a swing that we can get in and hold for 2 weeks. One side this week, Thursday could be can get and hold for 2 weeks. Boom. H1. Okay, we're all up under here. We hit this order block. We didn't really do anything with it. Sales was here is high quality. Push up. Weak swing. Fair value gap held. Push up. Drop. No close, really. This candle's interesting. We can take this off. This candle's interesting. Sweep. Didn't close below. Push up. Yeah, sales above here. Sales above here. Really here. I could sell here for here. Can't sell here. Where can I buy? I can only buy here. Buy here. Stop loss here. Especially with these lows. I want to see this cleaned up. Buy. We already hit the order block. Any refinement in this order block, we can say this is a fresh level we can buy from. Because this is the order block. Boom. We accumulated over here, pushed up. We can run this low too, but that's our levels. Okay. Starting off the week, I want to sell from the order block. I won't buy unless we hit the H1 untapped bullish OP. That's the aggressive entry. The highest probable buy most likely would be a sweep of previous week's low. Okay, that's this. Definitely going to spend some time improving the system for the swing trade. Because right now, I need it like I do my chart work. So I might end up coming up with some templates just for how I do stuff. This so far is okay though. Just one page log style. Today's the 16th. This is EU. Okay, this is live. Is this whole page live? Okay, this is cool, and I don't have to print this out. Glad I did that. Cool. Let's go here. Going into the week, EU still bullish. I would go all in on it. It's not financial advice. That's why I put the disclaimer on stuff. I'm a student, not a teacher. Let's look at the weekly. Boom. I like how we reacted here. We didn't clear this old high. It's that monthly level. But my charts is clean on TradingView. We've been holding in this candle. Accumulating here at this old high. I want to see us leave this area. No, we've been accumulating in the down candle. We haven't took the high yet. Let's go to the daily. And I think I'm gonna leave it here because it is a swing trade. I do like this. And I do like this. I like buying after we take this. I like this order block. I like how we did a propulsion block here. Only thing I don't like is the stop loss here. We buying after we break this high. On the daily is good approach. I might buy stop a down candle on the H4. See what we got here on the H1. I don't like being inside. What is this? Yeah, take this off. Each thing's just for the thing. Yeah, this been sweet. Let's go here. Where did this line come from? This is that order block. Ah, this is that order block. From here. Let's make sure. No, this is something else. Where did this box come from? Oh, it probably came from some way over here. Oh, look at all these markers I got. This is where I'm at now. Came up, we tapped it, rejected it. This is kind of a weird little setup. Let's go here first. Let's go to the H4. Push up, retrace, push up, retrace. Yeah, push up here. Clear this. Push up here. We could push up and then come back down, and then push back up. But internal range liquidity sweep done here. So we already had one of those. Which means this candle here, which means ideal buys here. At the propulsion. Leave. Might just gap up though. But ideally, buying here, buy stops here. There is no real stop out here. OTE maybe, but buying this retracement. That's the plan. Okay. And I'm glad I put this. I need to do my link tree to where I have the swing trade. I think on my link tree I got the other page too though, but C816. Just call it monthly. Yeah, bullish. Let's go to the weekly. Pushed up. Pushed up. There is no imbalance here. Sweeping this low candle. Some stops here. I can see buying this. A weekly internal range liquidity sweep is possible. Let's go to the daily. See how we looking over here? Range. Push up. Yeah, we really should be going. I'm not interested in this until we start closing highs. I'm going to let the correction go. I'm going to let just keep going. I'm not interested until we start taking down candles highs. We're not moving just yet, but if this is up, we can hold to end of year for real. That was daily. Yeah, let's go to H4. You're gonna chop, and it's okay. We'll let you chop. You can even run all this. It's cool. Cause look, you came up, ran this. Staying below that. Even got us a nice little order block. And we're in the middle of this range. sitting on my hands. Know how we have EQ of the range, and around the buy the lows, it don't look like it's ready to run yet. It look like it's engineering liquidity to be ran before it starts the real move. That's what it looks like. Okay, then I don't have to export that. All right, cool. We done. That's that on that. The links to this site is in the Telegram, and the PDFs for the chart work is going to be in there too. All right, y'all. Y'all keep it cool. Peace.